The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi, everyone. Basil Chapman sitting in for Larry Pesavento. Larry's lost his voice, I believe, but it's my pleasure to be sitting in, and let's hope that Larry gets well very, very soon. And welcome to this first show of, at least for me, of 2016. Normally I do the Tiger Technicians Hour at 11 o'clock Eastern Time. So let's get on with the news. And thank you to John Logan. A great start to the day, as always. The S&P is down 37 at 1997. Do you know that the futures were up 7 points last night for a little bit? And now we are down 37 points. Looking at the chart here, you can see this is a 120-minute chart, and that 120-minute chart shows you that you're making an arch formation with the left side, right side price time match to the low of 1995, I believe. Yeah, 1995.75 made at noon on the 21st. We've just done that. And the next level will be the 1991 low, and that should take us, well, it says here that if there's a price time match, that will take us to the one just hit exactly. The next one will come in at 2 o'clock on the 5th, tomorrow. So what's really important now is how does this hold? Once you start a sideways containment move, let me show you. I wonder if I've updated this. No, I haven't. This is the 10-minute chart. Why does it say 9 minutes? This should be the 10-minute chart. It's very interesting. How do you get to 9? Well, it's the 9-minute chart. And it made an arch formation and is trying to rally, and we'll see, because what has to happen is that you need to get to 2005. And if you, Larry's show is called Trade What You See. If you trade what you see, what you're looking at here is this low that was made in 1995, round number, at 21 minutes past 7 this morning Eastern Time. That needs to hold, start trading below it and closing below it for 2 out of 3 10-minute bars, and that'll suggest that there's very little upside pressure. But in the meantime, if there is a move now and it takes you above 2003.75, you will then see a move to the upside that will probably test 2007.50. That whole area, even the little bounce early this morning at about 5 o'clock, 4:30 this morning to 2010.25, all of that's game if you're able to take out and close above the 2003.75. As long as you're trading sideways like this, you've got to be somewhat careful. So let's run what's very moving at this particular point. Let me just do this first. You see the Dow chart right here? I had shown for my subscribers to my opening call, and also for on the show, I'd shown that there was this thick pink channel line to the downside, starting from the all-time high of the Dow at 18,351 back in May, made a series of slightly lower highs and slightly lower lows. And that contained area remained in place right up until there was a bounce around about the 27th of July from the 17,399 level to the 17,783 level, and on the 31st of July. And then there was an arch formation, came back, just nicked the support, ran up to the 200-period moving average, the orange line, pulled back, lower low, and then you saw a whole series of low lows until you smashed through that support level, going to the 15,370 level on the 24th of August. Now you start a rally that takes you all the way from 15,370 in the Dow to 7 peaks higher the 17,977 high of the 3rd of November. And then what does it do? And this is what we've been looking at, is the match between this trading band and what has been occurring. We've done the same thing. You see the thick pink line? You come down to 17,210, rally back up to 17,914. That's a little bit low. It's 60 points lower than the previous high. Come back and you go lower, about 60 or more points below the 17,210 low of the 16th of November. And you're going in a trading channel. And the trading channel is like a ping pong ball bouncing around in a tube that's to the downside until it breaks the low support. In this case, I was expecting there was just a chance that we, especially with action of certain key stocks in the Dow, that we could have pushed through the 17,750 barrier. It was just a perfect place on Thursday to say, hey, if by this afternoon there hasn't been a push through the high of the Dow that happened to be 17,750, then there's a chance that we could go short, because then you're going to be going down to the lower band, because that's what happened before. But I gave it an extra day or two, and that was not right, because all of a sudden you've gone from 17,750. If the Dow now opens down, say, 280 points, that 280 points from 17,425 takes you to the 17,170s or so. And look here, you've got this key support at 17,020. So let's say 17,000 is going to be really important. If that gets taken out this week, in the next couple of days, in fact, all of a sudden you're looking at a shorter time span to break the low, as we did back there on the 7th of July. But that went all the way below the trend line and then closed nicely above it. So this is going to be a very important level, because if we take out this pink, let me extend a little bit. If we take out this pink trend line, the down channel, what I call the inside Chapman wave inside track, I'm not going to make it messy. There's normally another, I'll do this. I'll just draw it in right here. I usually put what I call an inside track. Chapman wave inside track. And that says this whole area between 17,166 and 17,020 is sacrosanct. If that becomes support, regardless of what's going on, getting all the emotion out the way, that's where we might see another bounce. But I suspect that if that happens, the bounce will replicate that one, which is not even a 50% bounce, and then it starts to come back and retest. So very important period. Let's go through a couple of other things right now. What we're looking at here is GC, that's the gold, that's the gold contract, GC. The gold contract is up 1750 at 10,077.80, also within a narrow trading band. This is leg D up in the 120-minute chart, and it says a couple of things. It says, first of all, that the squash pattern that's happening in the MACD, the moving average convergence divergence, and the slow stochastic is a very positive one right now. I'll talk about that a little bit more when we get back. Basil Chapman sitting in for Larry Pesavento. This is Trade What You See time slot, but I'm sitting in for the moment. Thank you very much. I'll be back after this break.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. Basil Chapman sitting in for Larry Pesavento. So let's do this. We're looking at gold at this particular point. 1081.40 was the continuous contract high back on the 21st, was it the evening? Yeah, 21st. 21st, it hit 1081.40, and then it comes down in a series of lows, and it goes down to 1056.50. That was the low at 8 o'clock on the 31st of December. Now we're looking at it spiking up peak A. In the, let me just quickly say, in the Chapman wave methodology, one of the techniques we use is to go from the most identifiable low bar to at least a peak D. We've done it right there. We went to a D and then even an E and an F, and here we've gone to a D. What this says is there's a price time match to the low that was made right there on the 28th of December at 2 o'clock to where we are right now, but we haven't got to the 1081.40 level. And what we're looking at here is the high so far today is 1079.10, only $2.30 away. And this says that if there is a Chapman wave, let me just make it clear here. It's an expanding wedge formation. I call it the falling axe formation. If there is a price ratio of 1-to-1, then that says that by the 5th, that's by tomorrow at 6 o'clock, 4 o'clock, that's closing time, there should be a test of the 1081.40 level. Could happen sooner, but that's what it says right there. And what's very important about this is that the MACD and stochastic have got a pattern that I call the squash, and that says that you should go to at least a C and then go to a D in a very short space of time. This has gone to the D in a short space of time. Now, there might be a little bit of a rest, but the power at 91% in the stochastic is very important. So that says gold. This might be what I call a currency of fear move. When gold moves without the core relationship of gold being oversold, and there is now a technical factor where a whole bunch of aspects come together to ignite a move in gold that isn't just what I would call a fear trade, meaning that the markets internationally are so shaken up by China's pullback in this case that people are looking for a safety factor. I prefer to say that at this particular point, the bonds have been, since Thursday, have been the safety factor, and they're in leg. So this is the continuous contract 1919. So this says that bonds could still go a little higher. Let me just see this one here. I like to see that there's a consistent move of Ds from the lows. So this is an A. I'll tell you what it is right now. I'm just typing it. A, B, C, D goes to an E. This is an A, B, C goes to a D. This is an A, B, and we're in C, and it should go to a D today. Okay. What we're looking at here is that's down arrow, that's the caret, inverted caret. Now I'll explain it. What we're looking at is a series of arch formations with rallies that have taken the the 30-year U.S. Treasury bonds continuous contract from a low. In this case, it's the low that was made on the 16th. At the close on the 16th at 153.19 and 30 seconds. And then you start a move that goes peak A, B, C, D. Oh, for those of you who are new to the Chapman Wave methodology, that bar cannot be a high as well as a low. You have to actually make a V-shaped bottom. You can't call this a low until you know what the next bar is. If the next bar has a lower low, you can start your wave count. So that goes A, B, C, D, stochastic and MACD pull back. I put a down arrow, but in fact it has a little rogue wave spike to the upside, and that completes the move at noon on the 21st at 156.29, 30 seconds, pulls back and it goes trough A, B, C, D, trough E to the downside, then it goes upside A, B, C, D. So the low of at noon on the 23rd of December starts a move that goes to noon at 155.13 on the 28th. And then it comes back down again. Trough A, trough B, trough C. That's very bullish because it only made 3 troughs to the downside. And it goes peak A, B, C, and there should be a higher high to come at 155. We should go above that sometime today if, in fact, the market continues to decline. Now, that's going to be very interesting because we've got a trend line right here. And I heard some of John Logan, and John was saying, as he's looking at it right at this moment, he's looking at gold and bonds not having the kind of move that he would have anticipated with this kind of sell-off overseas and into our futures right now. I tend to agree with him at this particular point. The day is young, but at this particular stage, I would have thought that bonds would have been up 2 points or more, and gold would have been up, it would have spiked you up 30 points or so. Hey, the day is young. Anything can happen. So that's bonds. Now, let me make it real easy. What I have said to subscribers, I'm going to go to the VIX index right now. VIX.X. The VIX index trading at 1821 is not really what you can tell because we're only opening in another few minutes. So let me go to the TVIX. I could go to any one of the different VIX indexes, the trading vehicles. And in this case, it's the TVIX two times short the volatility index. And in this particular instance, 2 times short. 2 times long the VIX. That's what I meant to say. Not short, it's short term. 2 times long the VIX. And at this point, it closed at 66.26 on Thursday. And now it's trading at 727, up $1 and a penny, up 16%. If the VIX index, instead of trading in the 720s by 1:20 this afternoon, between 1:20 and 2 o'clock, if the VIX index has suddenly started to pull back and is now trading under 7, you'll have a very nice bounce in the markets. But we have to just treat it as a bounce first of all, okay? So let's get out of this, and I want to go to, we're close to 5 minutes to go, and I want to move this away and say, if you're looking at this index, you'll see that it's been at lows for a while. It had a big spike from 531 to 1990. That's an incredible move, percentage-wise. It's threefold almost higher. And in this particular instance, that was that scary move on the 4th of September, and then it starts to plunge and goes all the way back down. We've taken out 535. We've taken out the support levels, but we haven't broken the 531 low that was made just before that big move to the upside, and that started on the 7th of August. So we've got very clear parameters to watch, and I've made it very clear for subscribers in the, I'll just do this once again, INDU. If you're looking at the Dow, there's a channel. I would put in a Chapman Wave inside track support level. That's where there's a cushion, and there it is. And that cushion says 17,160 is going to be the start of that cushioning level going down to 1720. I'll be right back. Here comes a break, and then the market will be opening very, very soon. Basil Chapman sitting in for
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
folks, we're back. Basil Chapman singing for Larry Pesavento. Larry's voice is missing in action, and he's now missing in action. And of course, we miss Larry. Love to hear him, all his discussions about the way the fibs work, the way he looks at the Gartley patterns, etc. It's just amazing how that all pans out. So let me go on to the Dow, which is open. It's down 204, 217, 216, 200. Now it's stopped. I wonder, that's because not everything's open. 231, it should get down to about 250s, and then we'll see what happens. S&P's down 25 at 2018. The comp index is down 112. Whoa, 112, that's big deal, 2.28%. That's much more than the Dow and the S&P. Yep, now the Dow's down 260. And we've got the, so the trend has suddenly popped up to 115. The VIX is at 2248, up 4.27, up 23%. You've got gold with GLDs at 166, up 166 at 2. Well, where did it disappear to? At the GLD is at 103.12, up 166. That's what I meant to say. Let me just get there. So there's the GLD, big gap up. But now Owen has broken a little trend line resistance. Let me see if I can pull that back just a little bit more. Right there to there. Yeah, it's just over it. Okay, good. So now what we're looking at is that the, and silver, I'll do silver. Let's go to the SLV. The SLV is up 26 cents at 13.45. Not as big a move because it hasn't taken out that resistance point as gold did. So that's a little bit weaker. Now I can talk about the dollar. I meant to talk about the dollar earlier on. The dollar, when I looked at the dollar last night and then very early this morning, the dollar was still up. Now it's up a penny, but it had a nice spike, and then it dropped sharply. So the parameters are a high today of 98.95 is a continuous contract, and 98.05 was the low. So it's actually a pretty narrow trading range for the dollar. This is going to be very interesting for a number of reasons. Why? Because if the dollar is able to stabilize, I'm not sure it can. I might be behind even because I think the contract I'm looking at, the continuous. No, I've got the index itself. Mine's usually a little bit slower than most of the other. When I see other charts of the dollar, I'm usually 10 minutes or 15 minutes behind. And the whole thing about this is if the dollar starts to break and closes under 98 today or tomorrow, that's going to suggest that the next support of 97.80 is going to be really important because you could make an arch formation. I've already drawn two patterns here. One is the arch, one is the cup. And it says very clearly that at close into the 97.50s, you'll be testing the 96.71 200 period simple moving average support very soon. And if that is broken, then 96.08 is on the low side. If that happens, I will expect to see gold at this point. If you see a slide of that magnitude in the dollar, you would see something comparable on the upside in gold. I just have to look at it that way. Let's see, by now we should be down 300 or so. Yep, we're down. 351 in the Dow at 17,072. The S&P is down 36 at 2007. And now let me show you something that I think is going to be very important here. Here's that pattern that we were looking at. And the pattern says you can have horrible moves to the downside and you can have fabulous moves to the upside, but the pattern has been containment. It's just been a containment area, and that says if you match the pattern, the template that we're looking at from May to August, then you would find that you ran down to the pink support line in a very scary manner. Maybe not as big as this. We haven't had too many 300-point moves. This was a big one right here on the 29th of June, a move that the high was 17,936 in the Dow. The low was 17,590. We closed at 17,596. I would say the 370-point, 60-point move to the downside can be scary. There was another one, deep one over there, and that was in July the 8th. another 300 and almost 300-point move to the downside. So how you start to see the market hold here is going to be absolutely imperative. At this point, I'm calling it an E to the downside because it's taken out the left side low. In this case, the low of 17,116. We've already gone to 17,056. My thinking here is that we won't know for a little while meaning for maybe 3 hours, whether or not the if it happens during the day, if during the day we started off at a certain point and now we're running down to 340 points down, I would say that that is very different to going overnight, gapping down huge. Now we're looking at something else. We're looking at the potential to say maybe all the selling has been done overseas and a new mentality here, if we start to stabilize, could formulate and allow for at least a little bit of a bounce to the upside of the dash channel inside track, and that would say to 17,200. That's actually 130 points in a case like that. 130 points is a blink of an eye, but we don't know. We'll have to see what happens. So it's real clear to me. If we start to trade under 17,000, there's a different dynamic completely. Then I have to look at this and say, bearish, bearish, bearish. You can be as optimistic as you want, but the pattern says that unless there's a spike to the downside and then a pop back up over this trend line to match that move of both the move of the 7th of July and the move in the Dow of the 27th of July. Unless, or even this one right here, same thing with the trend line. You gap down, start to move lower on the 7th of August. And then again, there was another one on the 12th. Every time you just nick that trend line, you closed above it, except for when you smashed to the downside on the 20th of August. Is this that? Are we looking at the 20th of August in an accelerated time frame? The last break, I meant to count the number of bars. My eye says that it's a little bit shorter, and then we should have had one more move to the upside before we come down. So I'll do that during the break. We've got a break coming up very soon. So Dow down 339, S&P down 36. The futures of the NASDAQ showed that there could be a very sharp move down. What's very interesting here is that the comp index is down 105. It's coming back a little bit from the 114 low that we saw. So it's a little bit ahead of the Dow and the S&P in its rebound attempt. So we're going to see where that turns out. To go from, now I can do the VIX index because this is current price, VIX.X. The VIX index at this stage, there's a little gap. It doesn't look like much. It looks like a crumb fell on the screen right there. That's the price. If this becomes a red bar and it starts to trade from 2260 to 2210 or 2190 in the next couple of hours, that's going to be a little bit of a positive for the market. I'll be right back. Basil Chapman sitting for Larry Pesavento. Be right back.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Hi, folks. We're back. Basil Chapman sitting in for Larry Pesavento. My show is usually the Tiger Technicians Hour at 11 o'clock, so it's my pleasure to be here for Larry. And looking at the E-minis, look at this. All these series of H patterns that have failed at a peak B or a peak C, and all of a sudden you're not just retesting the low of 720, which was at 1,995, you're actually smashing to the downsides now, 1992.25. That's the 10-minute chart. But if you go to the 120-minute chart, and the VIX has started to rally rather than pull back, it's at from the gap up opening, that is at 22.93. If you're looking at the E-mini, look at this. The E-mini in the 120-minute chart, this is really a fascinating chart. Look at this. Look at the. Of course, you can only tell now historically because we're looking back. But the projection has been, once we start to break that support, this is the support right here at 2035.25. Once that was taken out at 5 o'clock this morning, you're looking at something that suggests that there's a one-to-one match, and we've already done that. That's from the 2075 high to that low of 2035, so that's 40 points. 40 points down from 2035 takes you down to 2095. And what are we doing right now? We're at 2092 in leg G/C. And instead of being tomorrow at 2 o'clock hitting the 1991 level, we're almost there now. So this is very serious. This is this is serious in the sense that support levels have been taken out in a very, very quick overnight move. You've done it in a very short period of time in a waterfall cascade. Those waterfall cascades very often start to see some kind of an attempt to reverse. And this is the pattern that says either there's going to be a plunge through 1991, or right now, as we're talking, within the first 15 minutes of the morning's opening, between now and 10 minutes past 10, there has to be an attempt to find some support here. For the best case would be a V-shaped bounce. But the other thing is for an arch formation, and that arch formation says, yep, I can rally up if I take out the high that was made of this bar, 2,375, then I could bounce a little bit further and go into this candle right here, the doji candle at 6 o'clock this morning, which is at 210.25. So this is so important. And there are a couple of reasons why it's important. Because within the context of now I can go to the TLT. I wanted to do that before. The TLT, which is the Lehman 20-year T-bond fund, what we're looking at is a situation that suggests quite strongly that the weekly chart asymmetric triangle with support that was so close to being tested at 119 is now seeing the resistance, a potential hit of the resistance between 122.90 and 123.10. If there is a move between now and tomorrow in the TLT that takes you to the 123.30s, I'd like to be safe. Let's go to 123.50s. There's a real good chance that the market will continue pulling back. So we're looking at the next, I would put it between the next 30 minutes to the next 40 minutes as being very important to see whether or not there can be a rally, a reversal that at least gives you a decent bounce off the lows. And it has to do it because of this particular chart formation here that says in the H pattern, look at this pattern right here. If there isn't a bounce from the bar that took out the left side low, in this case 2001 at 3:30 this morning, if this bar at 6:40 was able to go down and then close above 2001, that would have said, great, now we can make an H pattern with a slightly higher left side if it works out. This way, it says, this is now resistance to 2001 area, and you could reverse down. So that's this bar right here. It says this bar, or at maximum the next bar, has to turn around and then close above this left side low. In this case, it's now 1995. And if it does that, finally you can get a bounce. And the bounce says first level of resistance, 2001. Second level of resistance is 2003.75. If it takes that out, next level of resistance is the low of 20 minutes to 5 this morning of 2010.25. If, in fact, 3 bars later, we're looking at no chance for a close above the left side low, and we're still underneath 1995, it says be very careful, because the best might be just a rectangle sideways move before there's any rally, and it's not a good sign. So that's that on a short-term basis. Now, back to the TLT. If the TLT stalls here, it's still within a trading range. And my thinking is that the 121.30 level is the 9-period exponential moving average. A close below that between now and tomorrow suggests that there could be a rally in the market. My thinking at this particular time exactly is that some kind of a rally attempt should be started, and we should see a close above 1995. And if that's the case, by 5 minutes past 10, we should be trading. If this is at least a near term, let's call it a near term low formation, there should be a bounce that takes you to at least it's 6 or 7 points up to 2,000. Usually that's a lot of points, but it should be a rally that takes you at least to the by mid-morning. You should try for 2,375. That's 10 points higher. Sheesh, this is a tough market. Okay. Now, a question was, has Amazon made a very serious hat-trick top? Well, it's leg D in the weekly, in the monthly. You remember, we always go for those Ds in the Chapman wave. It can go to an E and an F, but what we're looking at here is that there was a doji candle on Thursday, the last day of the year. The MACD is still 93%. The MACD is still very strong. Stochastics at 93%. On balance volume, this blue line is suggesting we're making some kind of a top here. The weekly chart has started to move down already when it made that peak right there at 684.82 on the week of the 4th of December, the MACD started turning down, the stochastic started turning down. They're still strong. The MACD is just crossed negative, but it's still in a high territory, and the stochastic's at 86%, still above the 80% level, which means that that's still strong. Relative strength has been weakening. On-balance volume is just okay. So that's going to say that if we have to have I would like to say two closes sharply under the 9-period moving average for the weekly chart to give some kind of a sell mode, and the stochastic would have to be under 80%. So we've got a break coming up, and I'm going to come back and talk to you about what it would take to start off the daily sell mode and then the weekly sell signal in Amazon. And we'll be right back after these messages. I think there should be a rally. Let's watch it closely.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. And I guess this is the last segment. Yep, this is the last segment. Basil Chapman sitting for Larry Pesavento, and I hope his voice improves quickly. And we're looking at Amazon. So the daily Amazon pictures made in what I call a right arm extension peak F, and that suggests that a break underneath, let's look at it. Yeah, 635 is trading at 635. It's trading at 649 right now. Would say that, well, at this particular point, I'm not sure I have to wait for the close. But it looks like I would probably issue a sell signal right now. But if it closes underneath 835, I would go to a sell mode in the daily. Always have to wait for the full week to close out before you can talk about a weekly chart. But there would be a suggestion that a close underneath the whole series of lows of 639 to 635 from the weeks of December the 11th and 18th would, at least if the stochastic pulls back to under 80%, I could issue a sell signal. But if it doesn't, I'm going to say it's real close to a sell signal, have to give it another period, another week. But that would be the level. I would want those three conditions. The MACD's already turned down. That means the price has to, the MACD needs to further expand the weakness by the fast-moving average closing sharply below the slow-moving average. And it needs to close below 835. I suspect if it closes below 835, the stochastic will be at about 81%. I'd like it under 80%. If it closes under 80% this week, this Friday, first time we're having a full week, in fact, in quite a while, I'd have to go to a sell signal in the weekly chart. Nothing yet on the monthly. You have to probably wait all month before we get a clue. So now let's look at this quickly. Let's go to, there we go. Oh, nice move up. We've closed. No, the bar hasn't closed. Another, this 10-minute bar needs to close above 1995. It's at 1998 right now. I suspect, at least on a very, very short-term basis, we've gone to a trough E in the 10-minute chart. And that's going to be the clue. Obviously, the 10-minute will lead the others. So we're about to wrap up. And thank you so much for being here. And I'll be back for my own show, the Tiger Technicians Hour at 11 o'clock. Have a great day. Speak to you in another hour or so. Thanks for being here.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.